Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
We love index funds here at the College Investor. Maybe you know that, and we've recommended several in our guide to investing. However, there's a new type of index fund that's gaining in popularity and one that I think has a lot of merit. Equal weighted index funds. That is our show today, the College Investor Audio Show. Thanks so much for being with us. Okay, so first of all, an equal weighted index fund is pretty much just like it sounds. Everything inside the index fund is equally weighted. This differs from other index funds in that most are capitalization-based, meaning stocks with higher market capitalization or value are held as a higher percentage of the fund. Okay, so let's see how that really breaks down. What is an equal weighted index fund? Let's use the S&P 500 for this example. So you know that the S&P 500 is composed of the 500 largest stocks in the U.S. Right now, a standard S&P 500 index fund, let's use SPY, has the following top 5 holdings. Number 1 is Apple, of course, at 3.67%. Number 2, Microsoft, 2.37%. Number 3 is ExxonMobil, 1.85%. 4, GE or General Electric, 1.54%. And Johnson & Johnson at number 5, 1.53%. So, you can hear that there is a much larger percentage of the fund in several stocks, which can skew returns if these stocks perform well or poorly. In fact, that happened last week with Apple. In fact, that happened pretty recently with Apple. Many broad index funds were up much higher than the market simply because of the weighting of Apple and Microsoft in their portfolios. So let's look at what equal weighting does. One of the most popular equal weighted funds is the Guggenheim S&P 500 Equal Weighted ETF, RSP. If you look at the holdings of RSP, all of the stocks in the fund are at 0.22%. Since the fund is equal weighted, this changes the dynamic of the performance of the fund, since no single holding can overtake the others and performance is equalized. How equal weighted index funds outperform? So, the balance that you get with an equal weighted index fund really comes into play when you chart out performance over time. We have a side-by-side comparison of SPY and RSP over the last decade, and you can find it on our website, thecollegeinvestor.com. Over the last decade, RSP has returned 82.49% versus 64.41% for SPY over the same period. The key to this success is balance. At the top, no single holding that may underperform can drag the whole portfolio down, while at the bottom, faster-growing stocks get more weight than in a capitalization-based index. This allows for more growth, similar to what you see in small or mid-cap funds. There's got to be some drawbacks. Of course there is. The biggest one to equal-weighted index funds are higher expense ratios. These funds have higher expenses because they have daily costs of maintaining balance in their portfolio, while an ETF like SPY will only trade when major changes happen. Equal-weighted funds have to continually trim overweighted holdings to maintain the balance. Think of it like a daily portfolio rebalancing act. The second big drawback to equal-weighted funds is that the gap in performance vanishes if you move from large-cap funds to mid- and small-cap funds. In fact, the equal-weighted index funds are basically even at the mid-cap and then underperform at the small-cap level. Okay, so mid-cap equal-weighted funds. As we look at the Guggenheim Russell Mid-Cap Equal Weight ETF, EWRM, say that 5 times fast, versus the iShares Russell Mid-Cap ETF, IWR. You can see, over the last 5 years, if you're looking at a graph, total time of funds existence, performance of the two funds has basically been completely even, with just a slight underperformance of the equal-weighted fund. Over the period, EWRM returned 60.3% versus 63.53% for IWR. Small-cap equal-weighted funds. As we look at Guggenheim Russell 2000 Equal Weight ETF, EWRS, versus iShares Russell 2000 ETF, IWM. Over this period, ERWS returned 34.45% versus 50.94% for IWM. Yikes. That's over 15% underperformance, not including the higher expense ratio. Here are some lessons on equal-weighted index funds. The biggest one we've learned is that if you're looking for a large cap index fund, you should definitely look at equal-weighted funds. These funds are fantastic for large cap investors because of three things. Number one, it dampens underperformance of top holdings. Two, it increases performance of smaller cap holdings. And also, it has a bias towards growth stocks because of the equal weight. Second, we also learned that these rules don't apply to mid-cap and small-cap index funds for the same reasons. Equal-weighted funds are not good investments at the small-cap level because of a couple of things. Well, small caps have a tendency towards extreme growth, and you lose that with equal weighting. And then, larger holdings in small-cap funds are the ones you want to hold, but you lose exposure to. And finally, it's important to keep in mind the higher expenses when investing in equal-weighted index funds. Here's a little quick reference of some popular equal-weighted index funds. The most popular ones, and just in case you're interested in this, it's large cap. You're looking at RSP, or the Guggenheim S&P 500 Equal-Weighted Index Fund, the QQEW First Trust NASDAQ 100 Equal Weight Index ETF, and the EWRI Guggenheim Russell 1000 Equal Weight ETF. Here's an example of a mid-cap, and we talked about it earlier. The EWRM is the Guggenheim Russell Mid-Cap Equal Weight ETF, and the small cap, which kind of underperforms a little bit, the EWRS Guggenheim Russell 2000 Equal Weight ETF. Now, just a couple of examples. I'm not going to run through the whole list, but here's some sector ETFs. Basic Materials, RTM, Guggenheim 500 Equal Weight Materials ETF. And energy is RYE, Guggenheim S&P 500 Equal Weight Energy ETF. And there's some international ones too. Plenty of examples, plenty of options to choose from, and you can see a complete list, well, not a complete list, but a large one, so you can get some ideas at thecollegeinvestor.com. Just search for the title of this podcast, Equal Weighted Index Funds, and you'll find it. We love talking about this stuff, and we love helping you too. And you can help somebody else out by sharing this podcast and continuing to subscribe so that we all are just money smart and completely crush all of it. You guys are awesome. Thanks so much for stopping by today, and we'll talk to you again very soon.